Hello, and welcome to this review on variance analysis. Okay, some of these things you should have learned in class, depending what class you're in, but what I'm going to do is talk about variances for about 5 or 6 minutes. So, what is a variance? Well, a variance is a difference between an actual amount and a budgeted amount. A variance can be favorable or it could be unfavorable. So let's use an example maybe that you've experienced. Let's say you budgeted $250 for books and you spent $350 on books. What would happen? Well, if you spent $350, that's the actual expense. And if you budgeted $250, as I show in this diagram, actual $350, budget $250, the difference is $100. That is an unfavorable variance. See the parentheses? Unfavorable, see the U, variance. Okay, now what would happen if you budgeted $15,000 for scholarships, but you got $15,100 for scholarships? Well, that's a $100 difference. Okay, so that would be a $100 favorable variance because you got more than you budgeted. Okay, let's just look at a few more examples. Here's something called an income statement. And we again see unfavorable variances and we see favorable variances. Unfavorable variances have a U by it, and parentheses, a favorable variance has an F by it. So in this financial statement, we see that we had budgeted to sell 1,000 units, but we sold 780. That gave us a $220 unfavorable variance. Now, because we sold fewer units than we had planned, we thought we would make 800,000, but we didn't. We made 639,600. That's a difference of 160,400. That is an unfavorable variance. But because we sold fewer units than we planned, our variable costs went down. So we thought they would be 450, but they ended up at 350,950, and that is a $99,050 favorable variance. Now, when you get through the whole project, what you'll see is that we had a 72,000 unfavorable variance for the year, or for the month. Okay, now we have something else called a flexible budget. Okay, we're going to look at that. A flexible budget will then take, we'll set up a budget based on the number of units you've actually sold, based on what the master budget would think those expenses would be. So there's more variances. So in this case, we have the master budget, what we originally had, same case. We set up a flexible budget. We sold 780 units and we projected what the cost should be, but we still have our actual budget. And when we compare things, we have a variance between the actual budget and the master budget. It's unfavorable. But we also have a variance between the actual budget and the flexible budget, and we have a variance between the flexible budget and the master budget. Now, don't worry again about all the amounts or calculations, but we just see, I want you to see that we have favorable variances and unfavorable variances. Okay, now let's talk about manufacturing expenses. Again, you should have learned about these, but we're going to review them. How do we make a product, or what are the costs in the product? Well, direct materials. Those are all the raw materials that go into making the product. Direct labor, that's the people power. That's the labor that went into making the product. And then we have factory overhead. That's all those other expenses in the factory that are too low or too little to actually track, okay? So when we calculate manufacturing costs equals direct materials plus direct labor plus factory overhead. And we will have variances for each. There are direct material variances, there are direct labor variances, and there's also variances in overhead. So again, we're not going to get in details, but this is what you're going to be seeing in the experiment. You're going to be seeing direct material variances, you're going to be seeing direct labor variances, and I'm not sure if you see overhead variances, but I'm just trying to prepare you for that. Okay, so this is the conclusion of this variance review, and now you can go see your review, or not your review, your next session, which is actually a very current topic on creativity. Why do we need to learn or work or develop our creativity skills? And I'll explain that in the next video to you.